Good evening. The date is the 10th of October 2023 and I'm just going to recap my trades for today. It wasn't a particularly great day for trading. I took too many stops. I made it green in the end, but I shouldn't have got there really. So the first, I just open up my 5-minute chart. So my first trade of the day was, I was waiting for the break of 4400. In fact, I was waiting for the test of it, and I got in a little bit early. I got in at the top of this supply zone, and initially it went with me and it was doing okay, and then obviously you can see it quickly came out, and I stopped myself out. So the next area is the 4400, so I got in there, and I think I got in there, made a small gain, and then but not much to cover the stop out, and I ended up stopping myself out again, probably close to break even. And then again, then I got a bit frustrated and I tried scalping a few shorts, and I was watching for these pullbacks and I was trying to go short, and again stopped out break even. I think I had another stop out as well, and in the end I gave up trying to short and I was just waiting. And what I did notice, though, we had this big top in tail. That was one of my shorts actually. I saw the top in tail coming and I shorted on the way down, and it didn't last long because it stopped me out again. That was one of the scalps I tried doing. But what I did notice is we had this massive big run up with some top in tails, which shows that there's potential weakness, and then another big top in tail there, and that was on high volume, almost as high as the opening candles as well. And then we had these hammer candles come in as well, and as soon as you see a hammer candle at the end of a range, a hammer candle at the bottom of a range is a bullish candle, and especially if you've got volume with it as well, so you've got smaller volume and a big push, generally you can use that as a sign that it's going to push up. But a hammer candle at the end of the range shows that there's potential weakness. We already had these top in tail candles, so at one point that candle was fully green, and then it came back red, and at one point this candle was fully green, and then the sellers came in, pushed it back down again, and then we had these hammer candles, and these candles show weakness because at one point they were totally red, and that was a red candle, that's another red candle, so weakness is creeping in. And we had a decline in our volume as well coming into the top of this area, and so I was taking every pivot high, and I think I topped up. I got in quite heavy as well, and I was watching the level 2 as well. You can see a big area of sellers sitting there as well, and I was in quite heavy, and in the end it worked out quite well, and I had to go away. I went out, it's my birthday today, so I went out for a meal with my family, and so what I did, I set in a series of OCO orders. I had layers of stops set up here, and then I had layers of OCO of targets down here. And while I was away, we saw this big red bar, as you can see, and one at a time it took out my targets. And an OCO order basically takes out a target, it also takes out the associated stop order as well, so there's no chance of coming back and buying contracts when you didn't want them to buy. And then came into the bottom. My last two OCO orders were down here because I was waiting for it to come back down to retest this pre-market high, and as you can see it didn't quite get down that far, so I tried managing the trade myself. And the funny thing is, because I wasn't managing it, I did really well. The moment I take over and start micromanaging the trade, getting out and getting back in, getting out, getting back in, the gains from this trade down, which was quite significant, I started giving back in this area of chop, and it's a bit annoying. And I moved my stop loss down as well to here, and I got stopped out. And had I just kept my break even was basically here, and had I just kept my break even in place and then just waited to the end of the day, that would have been my out down here. It would have been a great trade all the way down. But in the end I micromanaged my trade and I gave quite a lot of the profits back. Ended up green to the point where I was just scalping off of the VWAP, and it wasn't great. I was trying to push, my scalps weren't great as well. I was going long on the VWAP and I was trying to get back up to here, and you can see it never really made it back up. So some I took a few profits, some of them I got out of break even and got back in again, out of break even, got back in again. And I think my last out was in the post market, just after the market closed, around this area. And I made it more hard work than I should have done, but a green day overall, but I made it a hard work green day, and I shouldn't, I just need to learn to not micromanage, add my target. In theory, I think I probably would have even hit one of the targets I had set down below the VWAP as well, and my next target was around here. So had I just left it and let it play out, then it would have been okay. But I see it goes back, it pulls back like this, and that's basically just a bear flag as well, and I should have just left it. And I think I did leave it to the point where I saw this come down and come right back against me, and that's when I brought my stop loss all the way down to the top of that area. And then later on I got played by the market and it took my stop loss out too tight. You should always have your stop loss a few ticks above an area of consolidation. My stop loss was dead bang on that area, and you can see it stopped me out, but maybe my stop loss should have been a little bit higher, maybe about there, or even using an area of confluence, maybe the tops of this candle and the bottoms of those candles. That would have been a better area, or even the pivots here. So, or I should have just left it at break even, which is up here. But anyway, lesson learned. I'm going to work on that side of things. So many days I get into trades and I leave a runner and I end up micromanaging my runners and getting out of it when it pulls back up at these levels, only to see it continue and do what I want to do. So I need to work much harder on that. Didn't trade anything else today, that was it. I think I over traded a bit today as well. I'm going to have a quick look at oil, see how we finished the day. It's not doing much at all. So since that big gap up, all we've done is gone sideways. We haven't really done a great deal, but it's eating time off the clock, so only time will tell. So potentially we could see a break above here, and that might be a good long play, so something to keep an eye on. Or we could also see a break below this area back down again. So we'll keep an eye on oil for the next few days, see what happens. Interesting though, look at this, for high volume candle on a narrow range bar as well. If you compare this bar to the previous bar, they're both the same size, but the volume was twice as much than the previous bar, and the previous candle was twice as much volume as the previous two candles. So this is a bit of an anomaly. What can it show? There's potential weakness there, indecision as well. There was didn't know which way to go, so potential weakness, and nothing really came of it. But we got decline in volume when it was moving back up again. So potentially we could be watching for a push back down, and like I said, I'm waiting for it to get back into this area for a potential swing trade long. Anyway, thank you for watching. Have a lovely evening, and I will see you tomorrow live at 9 AM Eastern Time or 2 PM here in the UK for the pre-market levels. And in that live video, I'll go through all the levels, trying to work out which would be the best areas for shorts and longs. Anyway, thanks for watching, and speak to you tomorrow.